Hi, please take this seat. So hello, good morning.
Good morning, sir.
May I have a CV, please? So Shivani, please introduce yourself.
Good morning, sir. Thank you for giving me opportunity to introduce myself. My name is Shivani Jain, and I am recently minted qualified cost and management accountant. I am basically from Uttar Pradesh, and I completed as a part of my curriculum. Completed my practical training from Nextcam Pharmaceutical Company and Sachin Cage and Company, where I get different exposure relating to financial reporting, Indias and internal audit, etc. Uh, as far as in my leisure time, I love to do painting and listening music. And in during the articleship, I'll handle many clients where I also advise the client about tax advisory, GST compliances, and many more other things. As far as my academic academic, I completed my graduation from Rajasthan University and schooling from my hometown. That's all about.
Okay, good. So as you said, you have worked in financial reporting and internal audit and tax compliances majorly, right? So which one is your favorite subject? Or what did you enjoy, while you were pursuing your cost accountancy articleship?
My favorite subject in taxation,
Taxation. Okay.
like GST compliance basically.
GST.
Yes.
Fine. So let's say Shivani, if I am installing a lift in one of my factories, so assume my lift is of 3 floors, ground, first and second. So on the first floor we store goods, on the second floor we fabricate and manufacture, and on the third floor we paint. We have a paint shop where we paint and pack it, right? Till date there has been no lift in my office, but now I am installing a lift which my labor can use to carry goods from one floor to another. Assume that the lift cost me around 5 lakh rupees, on which I have paid 28% GST. Can I claim credit for the same?
Yes, sir. Because this is taken for furtherance of business.
Is it not a immune property which is specifically denied under section 17(5)? Not a immune property.
Yes, sir. But it also it just like other things like PP. This is also using in manufacturing the things. You see from that asset also. Why not?
So there is a specific clause mentioned therein that if the plant and machinery is immovable, you can't take the credit under section 17(5). So are you aware of that? Yes. Okay. So are you aware of that there has been a recent change in e-invoicing norms? So what is the threshold of issuing e-invoices?
500 crore.
500 crores. Are you sure of that?
Yes, sir.
Okay. No, it's 5 crores actually. You can see in your CV that you have mentioned that you have done physical verification of inventory. So what are the methods to value inventory?
There is one method, cost and NRV, whichever is lower. As mentioned in India's we value the cost of inventory in cost and NRV, whichever is lower. And it can be different case where we measure at a NRV like by product. We measure at a NRV, not at cost.
And what are the methods prescribed by Indians to compute cost?
FIFO and weighted average.
Are there only 2 methods, or is there any other method also?
Other method also, but India's prescribed only 2 methods.
Shivani, where do you see yourself 5 years down the line?
See, as organization, I see in 5 year down the line, in the strategic finance position where I provide many advisory. I provide advisory to different team members and top level management, which help to solve the problem of strategic decision, solve the problems and make a strategic decision which will ultimately contribute to the organization. And also I evaluate the things of my team member that help the organization as well, to improve myself also and my team member work also. In my personal things, I want to create wealth, and that's.
As you have been shortlisted by IOCL, assume that I believe you know that IOCL is also into selling gas. So assume IOCL through its entity Indane is selling gas to customers, and you also assume that particular gas is supplied through a pipeline and not through the cylinder. So I'm sure you must be knowing that in most of the cities now the gas is supplied through pipelines. So assume that IOCL has given this contract to a third party to supply gas through its own pipeline to the consumer, ultimate consumer, right? IOCL is the one, Indane is the one who is receiving revenue. When are you going to recognize the revenue in this case? Could I repeat the question?
Yes.
Okay. Assume I am Indane Gas and I am supplying gas to all my consumers, and that gas is being supplied through a pipeline which is laid by IOCL or Indane only, right? But the duty to supply gas, to make sure that the gas is being supplied to the ultimate consumer, is of a third party. IOCL is paying to a third party to get this work done. Revenue, the amount that the customer is paying, they are not paying it to the third party, they are paying it to us, right? When should they recognize revenue? Take your time, think, and then answer.
Depend upon the situation, that if what is the criteria of IOCL to charge the customer. Like if they charge monthly wise, they issue an invoice and also a statement that this quantity of amount of gas will be transferred to that customer, and according to that they will recognize their revenue.
So will they charge it over the point in time or at a point in time? So generally, how does this?
At a point of time.
At a point in time. Is it not a continuous supply of service?
Yes, it is a continuous supply of service, but we cannot elaborate how much gas is transferred, with which time they use it. There is no other measurement how to measure it.
Okay. So in your opinion, it has to be at a point in time. So what are the 5 steps prescribed by Ind AS 115 to recognize revenue?
Firstly we identify the parties. Who is the supplier and who is the receiver, and then after we will decide what is the performance obligation. Like example, we will take that laptop. If we purchase laptop, we also get the bag and charger, and also a warranty card. In warranty card, there is also an option provided that we are also extending the warranty 3 years. For that we have to pay extra charge. And in this situation, we have two performance obligation. One is we purchase the laptop and other accessories, and other is extra warranty period charges. So in this, then we find out the 2 performance obligation. Then after we decide the transaction price, and we allocate the transaction price standalone basis.
We first decide, or we first identify
the parties.
Then we, in the second step, what we do?
Performance obligation.
Okay. And in the third step, we determine the transaction price.
फिर allocate करेंगे. We allocate the price and then recognize it.
Okay. Fine. Great. So as you said that you discussed about warranty. Just now you prescribe warranty. So how do you account for warranty as per Ind AS 115? What are the different types of warranties available in Ind AS 115?
I don't recall it, but later.
Okay, no problem. So Shivani, what's your biggest strength?
I'm very observant. In my articleship, I experienced that when I want to go for auditing, one of the client, I see that the GST number is not mentioned in the factory date, and I'll observe it and inform the top level management. Please affix the GST number. Control specific problems I have solved. So I think I'm observing it.
Okay, great, nice. That's a very good observation to make client aware of. Is there any penalty? Let's say if the client did not mention GST number on the gate, is there any penalty under GST law?
Yes, yes.
How much is the penalty?
25,000.
Are you sure?
Yes.
Okay. What is section 16(2) proviso in GST Act?
16 is related to the ITC. In proviso, bill to ship.
Okay, are you sure? Bill to ship too. Are you aware of that the supplier needs to, or rather the purchaser needs to pay to the supplier within 180 days?
Yes.
Okay, so what is the rule all about? Let's say, what does GST Act say about a transaction where payment has not been made within 180 days?
If purchaser did not pay, if the inward supply is made and the purchaser cannot pay their payment in 180 days, then he reverse their ITC. Reverse their ITC if payment is not made within 180 days by the seller.
So is there any interest liability as well?
Yes, 18%.
That you have to pay 18% per month?
Per annum. Per annum.
Per annum. Okay. Nice. So are you aware of recent changes that have been brought in regarding payments to MSMEs?
Yes.
43BH.
Yes.
Can you please elaborate on this one?
There is an agreement between two parties who are entered for a transaction. Then there is a 15 days criteria. We have to payment in 50 days. If there is no agreement is available, then he have to then the buyer has to pay 45 within a 45 days.
Is it 45 days or 15 days?
Sir, 15 days when the agreement is exist.
Where the agreement exists, we have to pay within 15 days, and where there is no agreement, we can pay within 45 days. Do you feel that what you are saying is logical? Don't you think if there is an agreement, we can pay up to 45 days because there is agreement in place?
I think 15 days is the minimum time. This will be increased to 45 days.
Okay, I think you should go back and check this. So there have been recent changes that have been brought in, capital gain
Yes.
on equal property. Are you aware of that?
Yes.
Can you please elaborate on the same?
Capital gain, if we talk about the long-term capital gain, indexation benefit will be removed, and the flat rate of 12.5% is effective from 23 July 2024 onwards.
Let's say if the house property pertains to the date on which budget was passed, before that, can we still take indexation benefit? We can take it. And what if the property pertains to a period after the budget was passed?
Then there is no indexation benefit.
As you have mentioned here that you have advised the client in taking section 54 and 54AC exemptions. Let's say if I fall in the new tax regime where I can't take indexation benefit, can I still claim section 54 exemption?
No,
we can't. What is percentage of completion method of recognizing revenue?
This time I am not.
As you have been shortlisted by ZWork, which is an infrastructure company, what do you feel? How they would be recognizing their revenue?
It depends upon what they provide, what type of infrastructure facility they provide. If they are
Let's say they are building roads, constructing roads.
Then the completion, they are according to the percentage of completion method.
Okay, that's what I asked. Are you aware of that? Not as of now. Why do you wish to work with IOCL?
As I say, IOCL is oil and gas is very important sector, and IOCL is the biggest industry, largest industry in this sector, and they are also a good there is also a good performance as per the report, audit annual report, day by day increment in EBITDA and sales revenue, and also we also see the growth opportunity in IOCL. So I have to work with IOCL, and I also get the experience. I also get an experience with the working with experienced professionals, and this will give me an opportunity to grow as a fresher. So I work.
Okay. What is component accounting?
Component accounting is that in as per the India's 116, if let's take an example, if there is a machinery, and in machinery there is a part which will be replaced in there is a part, machinery's life is 10 years, and one of the part is useful life is 5 years. So then we have to use the component accounting to depreciate that machinery. Part is depreciated for 5 years, and other part of all the part of machinery that will be depreciated with 10 years.
So how do you disclose it in financial statements? Do you disclose it separately, the component separately, and the other part of the asset separately?
Not it
Or
is
do you disclose it at the same, like a one asset?
as a it is disclosed as a one asset, and but disclosure also mentioned in the notes to accounts that type of part is depreciated, that like disclosure notes to accounts.
And what is this like? Is it accounting policy or is it an accounting estimate?
This is accounting estimates.
Estimate. Let's say you are disclosing that this particular asset is a major component and this particular thing is depreciated separately from the asset. Is this sort of disclosure accounting policy disclosure, or is this sort of disclosure accounting estimate disclosure? You can then answer.
This is accounting policy disclosure.
Policy. Why do you feel so?
Because if useful life is different, then we have a policy that we have to depreciate according to that useful life.
Okay. So assuming that what you are saying is correct, right? And maybe after 2 years, you come to a conclusion that this particular component is no more a separate component, it is as good as the asset, and hence you are changing the accounting policy that from now on this will not be considered as a component. How do you account for the same? How will you treat this particular change in the books of accounts?
First of all, we have to calculate.
Okay, let me be more clear with the question. Will you change it retrospectively or will you change it prospectively?
First, but we have to take the difference and transfer to the P&L account.
Okay, so you will do it prospectively, not retrospectively.
Yes.
Under which India's this sort of arrangement is mentioned?
India 16.
16. So does India 16 speak about accounting policy?
No, India's 8.
I can see that you also done internal auditing work, in your CV, right? What are the major risks associated to, as you mentioned, procurements here? What are the major risks associated to procurements?
Major risk will be that agreement is expired, and PO is initiated, but we cannot see the stock that is available or not. This is the major risk, and this will lead to overstocking, and which will also affect the budgeting.
How is it resulting in overstocking when the stock is not even come? It is merely a PO. So let's say, let me ask another question. Let's say you raised the PO, but you have not received the goods. Will it impact the stock count?
At that time, it not impact the stock count, but PO is initiated. This will affect the finance budget already allocated to that PO.
Okay, but it will not affect the stock count.
At that moment, not.
At what moment does stock count changes generally?
When the goods is received, and it will and already have a goods, but goods overstocking situation will be arise when we have extra goods, but in and we have already in the warehouse of that goods we needed in the production.
Assume that you have received the goods, it is lying in your premise. Will that impact the stock count, or when we'll do a GRN, it will impact the stock count?
When GRN is initiated.
Just now you said that when you receive the goods, it will impact the stock count. Until unless GRN is not done, it does not show in the records. So merely raising PO does not impact the stock count. Okay, what else? What other risks are there in purchase? You just gave me 2-3 risks. Give me few more, at least 3 more.
Unrevised PO.
Revise the PO.
If there is any change in inventory, like we let's take an example, we need 1000 units, but after some time we found that we have a stock of 500 units, but and I already initiated the 1000 units PO, so we have to revise it first to which will decrease to 500.
Okay, fine. Any other risk?
We have to check the quality assurance.
So is it a quality assurance related risk? Is it a risk related to the quality team, or is it a risk related to the procurement team? Bad quality is a risk of quality assurance team or a procurement team?
Quality assurance team.
Okay, but now you said that it is a risk of procurement process, right? So what exactly will be the risk in case if the quality of goods is not something that we expected?
And we have to take an initiative. Quality assurance will be done before generating GR.
Right. So that's the risk. Good. And moving on, you have also mentioned that you have done ratio analysis and trend analysis work, right? Assume my equity ratio is increasing. Is it good or bad?
Is it bad?
It is bad.
But it depends upon the business also.
Like how?
If we take an example of small retailer, and they have a debt over equity, more debt but less equity. This will burden on of interest payment on that, and that hamper the growth of the business. If they does not sustain the competitive world, they have create a debt obligation which will lead to unusual condition. And if we take an example of a big infrastructural company, that is very important because in many projects there is a need of high funds to initiate that project. So in that situation, debt to equity ratio is high.
Let's say, okay, good, you answered it well, but as the question says that the debt equity ratio is high, right? What other parameters are you going to check except the industry part that you already answered? What other ratios, what other financial parameters are you going to check to determine whether the debt equity ratio is appropriate or not?
We have to check profitability ratios, efficiency ratios. This will help to.
I would request you to be a little more elaborative, because that way I'm not able to understand what you're trying to say. You're saying profitability ratio, like what in profitability? Exactly which ratio should I look into?
Apart from that, I also check the interest coverage ratio.
Very good. Okay. What else? What does interest coverage ratio tells us about?
It tells about what is the EVIT. Over that, we have enough EVIT to pay the interest payment. This will lead, if interest coverage ratio is high, this will leads to the business is in good condition.
Okay, nice. What else? Give me 2-3 more points. This is a good answer. What about debt service coverage ratio? You should not say I don't know. You should say that I'm not able to judge how it's going to impact the SCR at the moment. Okay. What else? Anything else that you want to see? So industry is a good answer. Interest coverage ratio is a good answer. What else?
We have to check the liquidity ratio, like quick ratio. Uh,
Will it get impacted?
this will showing that we have to meet the obligation of current liabilities over the liquid assets. We have enough.
No, I don't think so. Fine, no problem. You have been a ranker in CMA Inter, right? So what you did different from others that you secured a rank? What you did differently than many others who haven't secured a rank ever in their lives, and you've secured a rank in a professional exam. So what you did differently?
Whenever I take the class, every concept which will be explained by our teachers. After the class, I recall it one time. Then after the week, within a week, I again recall it. This will.
What you mean is you revise it.
Yes.
At the same time, right? Okay.
And this will revise my concept, and also provide a clear picture of that. So because of this reason, I'll secure. And also there is also one reason also at the peak time. I joined the test series where I test myself how to improve it, how to improve the current numbers of marks, and how to study. And I also take the advice of my teachers how to practice it. This will
Why did you choose cost and management accountancy as a course? Why not any other finance course? There are a lot of courses nowadays in finance. Why only CMA?
Sir, other courses is very comprehensive, and it is very good courses also. But CMA, I choose one of my cousin also done the CMA, and they are also placed in a good reputed company, and from that I am inspired. From that they encouraged me to join this course.
What is the entry for creating provision for bad debt?
Provision for bad debt. Debtors account debit to provision for bad debt.
Debtors account debit to provision for bad debt. Are you sure? This way you are increasing the debtors and creating a liability. Do you debit debtors? No, I am not saying it is a bad debt. I am saying just you are making a provision. How do you create a provision? Okay, forget bad debt. If you are creating any provision, how do you book an entry for the same?
P&L account debit to provision for taxation.
So if this is the entry for bad debt, also provision to provision for bad debt, P&L to provision for bad debt. Answer it well. Why were you not able to answer the question earlier? This is the entry provision to P&L to provision for bad debt. Okay, when do you suspend borrowing cost as per Index 23?
It depends upon the situation of the project. If we cross the research phase and we enter in a development phase, we have to stop capitalizing at development. Not it. For one second.
Are you sure?
I have to. Let's take an example. If we purchase machinery, that will be assembled, and we borrow for that. Then we have to capitalize from that period which is ready to create.
So Shivani, are you bluffing? Okay, fine. So whose responsibility is it to prepare a bank reconciliation statement? Management. Okay. How do you prepare a bank reconciliation statement?
First of all, we have to take the balance of bank statement which will be provided by the banks, and we have to and also take the accounts balance as per the book bank balance. Then we have to find out what is the reason of variation, if there is any variation, and also find out what is the transaction taken place between periods. This will lead to
Understood, no problem. As you said that there could be, variation in balance as per books and balance as per bank statements. I suppose that you are about to say that. What could be the possible reasons for the same? Reasons for variation?
reasons that NEFT is not hit and RTGS is not hit. Check is presented but not submitted in bank.
Check is received but not submitted to the books.
Transaction failed.
Okay.
If
nice.
there is any problem of bank server, if there is any problem in
That means
account of
transaction
the
has already failed, right? Let's not get into the detail. Fine, no problem. Let's say a company has 7 bank accounts, out of which in 3 bank accounts there are no transactions. Or rather, I should say this way, that the opening and closing balance is the same. Will you still prepare a BRS?
Yes.
Why?
Many times client don't want to disclose the high value transactions which will be done within a period and after at the point of end of period like 31st March we prepare a bank reconciliation. At that moment the balance of opening and closing is same. So by the bank reconciliation we find out what type of transaction and what amount of transaction will be done during the period.
Okay. How do you recognize income that you are generating? By investing, general borrowings. How will you recognize a transaction where you are earning any income out of the general borrowings invested?
It will be reduced from the finance cost. Interest.
Okay. What about a scenario where the borrowing cost is a specific borrowing cost and not a general borrowing cost?
If we take the loan for
Or rather, not cost, general borrowing. In the erstwhile case, it was general borrowing. In this case, if the borrowing is a specific borrowing and you are investing that amount, you are earning something out of it, how will you treat it?
It is a temporary income, and we have to calculate first the borrowing cost, and after that this income will be reduced from that cost.
So in case of specific borrowing cost also you are going to reduce it. In case of general borrowing cost also you are going to reduce it. So for both the borrowings you will reduce it from the finance cost, right? This is what I will be trying to say. You mentioned that you have also worked on Schedule 3. Can you just elaborate on what all items are covered in finance costs that you disclose in the P&L account? What all comes under finance cost? How does the asset side in a balance sheet looks like under Schedule 3 in Division 2?
First of all, we have to mention non-current asset. In non-current asset, first mention fixed asset and intangible assets. Then after.
So is it fixed asset or PP?
PP. PP and intangible assets. Then after we show the current assets.
Where do you disclose capital advances?
Advances is a part of a non-current asset.
How do you decide whether a particular asset is a current or a non-current asset?
It depends upon it depends India's one.
What does India's one speak about? Like what does India's one guides you about?
India's one does current asset, about current asset.
That was the initial question. How do you decide whether a particular asset is a current asset or non-current asset? So can debtors be non-current?
Yes.
How are you deciding this?
If we does not realize in a particular period which is
what is that period?
As per AS it is 12 months, but India's it is takes substantial period, but there is not mentioned.
What this period is called?
Normal operating period.
Operating cycle, right? Okay, Shivani, that's all from my side. Any questions?
My question about that is there is any skills I have to acquire to perform well in your in the organization like IOCL?
Blah blah blah. Any other question?
What is the growth trajectory that I serve in the organization and achieve?
Okay. Blah blah blah. Okay, Shivani, HR will get back to you. Please wait outside. Thank you.